Happy quad witching Friday, traders. It's 8 a.m. Chicago time on the 17th of September 2021. This is episode number 2075. 2075. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Again, it is quad witching Friday today. Please take a moment, give me a mic check. Just let me know where the audio is. Appreciate that. I generally find out in the middle or after the fact. It's distracting. So, quad witching Friday today. Some products will expire at 8:30 Central, 9:30 Eastern. That is the Wall Street Open, and some products will expire at the close. In either case, the futures continue to be the instrument to hedge exposure, equity or option exposure elsewhere. So there are things like delta hedging, delivery hedging, all that stuff, and that continues throughout the day. And this is the end of it. I can't tell you how ever since I switched from high volume equities to high volume futures to trading structured futures, one of the things I never looked back at equities as a trader, of course, as an investor, but not as a trader. And the biggest thing I don't like about futures is expiration, but it's built into the purpose of these instruments, the rollover expiration week. You probably noticed this week that the scenarios were almost always scenario 2, or they were right off the get-go. And like I mentioned last week on Thursday on rollover day, I said I generally take the last Friday, all the way through this Friday off back in the day when I was just trading for myself or for my prop shop. And it's because of that. There's just a lot of dynamics there that are hard to account for. We did have some pretty good trading and structure this week. We saw some really excellent setups, in my opinion. But still, it's it's not an easy trade. But it's almost behind us today with quad witching taking place and the roll and expiration coming to an end. We resume back to normal business on Monday, and then on Wednesday is the official end of summer. We're coming into one of the busier parts of the year, and of course next week we've got some major announcements. We have the Fed rate decision and press conference on Wednesday, and we've got various. We have the BOE interest rate decision, and we've got various high tier releases. So it should be a relatively active week. Next week, with the higher volatility, we expect this to continue. Right now, the position of the market posture overnight is mixed. We see that equities are around unchanged. We're seeing 6 basis points to 10 basis points from yesterday's settlement. So we have not really changed. We haven't really changed much from yesterday's trade, although we dipped down in the U.S. equities in sympathy with Europe and have taken a bounce. Crude oil still hovering and holding. Yesterday was trading up to 72.60, somewhere in that range. Is still holding the $72 handle. Copper, gold, and silver took a hit yesterday, with copper recovering slightly, a key input, industrial input, and then the crypto space is remaining is gyrating sideways with ETH pulling back. What's going on? What's on deck? There's not much in terms of news. Still some chatter out of China. The clampdown, the lackluster growth. And by the way, if you did not attend Jeff Snyder's and I's webcast yesterday about inflation, Fed tape, we talked Let's see, macro overhangs, the key macro pieces that are kind of looming above the, over the markets. We talked about China, global growth, China. We talked about inflation. We talked about what the Fed is got in focus. We talked about pandemic effects into the end of the year. We talked about the debt ceiling, and then um, John Snyder's scenarios going into the end of the year. And there's some really interesting things that were shared that I feel like all traders should know, and I urge you to catch to catch the recording. So, anyway, chatter about next week's central banks. That whole news cycle is beginning. Today we have Michigan sentiment and expectations. This is the prelim number, and it's a pretty. It could be a market mover that comes out at 10 a.m. and then that pretty much ends it in terms of key events. Expecting today to be relatively muted, I should say. The S&P, turning our attention to the S&P, we have a multi-distribution overnight profile in the S&P, 221,000 contracts traded. Inventory is about 55% short. A lot of the volume occurred below yesterday's settlements, all that saying, but the range is pretty decent. The range is again one of our key levels yesterday. The 49 area is the low at 44, 48 and a quarter. The highs at 72. Our key figure in this area is 76. And the point of control currently at 44, 53, 75. Just beneath that 44, 56 level, and then the level in between, which we are kind of attacking now, which is around where we opened, around where we closed yesterday, is, of course, the 44.65. Again, like I said yesterday, there's a lot of structure, which gives us, in my opinion, favorable risk reward and clearly defined areas this whole week, and that structure has a lot to do with those particular levels, down to 28.75, 32, and then 50, 56, 65, 76, and I talked about the 82 and so on. Anyway, I'm getting ahead of myself. Ahead of myself here. So let's just switch gears and look at what was expected. What was expected for yesterday. Yesterday, the primary expectation is that we were likely to dip down. We're likely to dip down and rotate up into the 77, and I expected us to tackle the 82, 81 area as a primary scenario. The secondary scenario is a push into the 77, potentially 82, 81, and then failing down into 50, potentially 38. That's what I was looking for yesterday as a key area. So I'm having audio issues. Is that the problem? Audio is dropping. Is that correct? I'm not sure. On my end, everything looks good. Here's what actually took place. So yesterday's scenarios, again, pretty conservative. The market had different ideas. Here's what we are looking at for yesterday. So let's clean this up just a tad. Yesterday, we pushed up to the 69.50, pushed back to 62.75. Remember, the 65 is right in between here. And then we squeezed to the 76, which is a major stock zone area, 76, and then we failed from there, and then we started to generate this lower high for a trigger short and look for it to clear 60 all the way down to 50 being the key target, and it just falls right through to 51, pulls back to 57, remember 56, pulls back to the 57, and then it reaches 44.50, and that pretty much ends the trade. However, it actually continued to pay out It provided access, a tag of the prior day's point of control right in here, and then it consolidated near lows before it formed the IB, broke the IB to the downside. But I was looking long early, then it flipped to neutral, flipped to short, and I told everyone I posted on the Head Trader channel somewhere in here that shorts should be warned at this point to be cautious because it is likely to creep up, and the creep up was looking for 56, 65, 56, 65, pull back, push through into the 77, go for neutral, so break the 76, and then pull back to the 65 again, and then consolidate into the close. And that's pretty much what happened here. We got a shallow pullback in this area, but again, 56, 65, 70, 77 were the key areas, and you can see the market turning there. So if I turn on the stock zones, which haven't changed much from yesterday, you can see we're trading these pretty well. And that's what I meant by pretty good structure. I mean, when you have something like a low volume node or a low volume zone like this, once we break below, we expect the market, you would want to hold through this. You'd expect the market to go to the other side of the low volume zone. And then once and then we expect it to potentially bounce and fill this area in. But if it fails through, then you're looking for the point of control, which wasn't far in this situation, but still we had a pretty good structure. We left a key low volume node yesterday at the 56, and we formed a lower distribution and an upper distribution, splitting the two. 56 happened to be the overnight low yesterday, not for this current session, but yesterday's session. So we could see there's a clear delineation of what areas we're likely to test and how the auction is progressing. Very important to kind of to keep an eye on that. Let's turn these off for yesterday, and then we're coming in. We came in to selling. Asian session is sideways to a downward skew. The Europeans come in here, right in here, push higher into 72, pull back, lots of selling in Europe. Retail sales out of Great Britain missed by a fair margin, expected at plus 0.5, came in at negative 0.9. And some Eurozone numbers also missed. Inflation was in line for the Eurozone, so that's pretty decent. And here we are again in that 65 area. Essentially, we are opening in the same spot we were in yesterday, except we flipped the point of control beneath us. But overall, the point of control, the full session VWAP, full session mid are on top of each other in the 61 area. So we have 59.25 for full session VWAP, 60.5 for full session mid, and the point of control at this 61 area, which has just transitioned from here to up here. So what we have is a profile that's starting to coil, and we have the same situation we had 2 days ago, the same situation we had yesterday. We have it again. So the natural thing to want to say is, well, that means they're probably going to run it again, just like they've been doing. I'm keeping my hands off this time, off the open, and just letting it kind of do its thing, paying attention to the predefined areas that I'm interested in, and taking the risk in those areas and seeing what happens next. What have we accomplished for the week real quick? Look at how this is stabilizing. We've had lower time frame or a one-time framing down, then we poked a little bit, and we had a higher low, so we had a bit of a challenge to the one-time framing down. So this is like slowing down. We've reached the bottom of the hill here, it seems. And then yesterday was somewhat of an inside day, higher low, higher high. But what's important is we keep failing to challenge these lows. This is likely to result in a push into the key 82 area, 81, 82 area. We have failed so far to make the turn here. I keep preempting it, but I have to go with what the market's telling me. And so today's scenarios are going to look the same. I mean, if every time a scenario doesn't work, I go and change my trading plan, this is the cycle that I see a lot of traders go into of just never really getting there because we're just constantly changing our trading plan. But the fact is, I'm looking at the auction and we're leaving this week's MC point of control beneath us. We are in the thin range of last week. You can see the thin range here of last week, and we're stabilizing. It looks to me like we did find our low, and we successfully tested at this key MC point of control area that I mentioned about a week and a half ago as a key target down below in a December contract at 28.75. It used to be 38.44, 38 in a September contract, currently 44, 28.75. And we've tested it down here and we are stabilizing. So to me, this looks like a move from balance to balance to balance, and then a potential return to this balance right in here before we challenge the 81 and squeeze into 45.10. 45.10 becomes the key target above if we can clear the 81. So we have 81 to 82, we have 99 to 501, and then from there 510, and then if we consolidate at the 510 and start pushing, then that high is toast. And again, shorts are getting squeezed. That's a lot to cover, right? So let's take a look at what's expected for today. By the way, before we do that, guess what? Guess what day it is? It is Where Are You From Friday. So please, just for shits and giggles, as they say, please tell us where you're located. If you have a Twitter handle you want to add, please pop it in. If you want to be contacted by those in your area, do not share your emails, phone numbers, anything like that, but just let us know what city, state, province, and country you're in. It helps people look around. If you want to be contacted, add your Twitter or Instagram handle or whatever. And of course, you can always block people who become annoying, which I don't expect this group to do. But if you see someone around that you want to get in touch with, and they've provided their Twitter handle, I cannot encourage you enough to just connect and set something up on Zoom or whatever and just become accountability or trading partners. We all learn better as a group, right? This is the whole point of this Trader Bite. So let's take a look at what's expected for today. It's a lot of talking. Here we go. Let's bring this structure in. And look at look at how this thing is setting up. Look at how beautiful this is. That's just some nice balance here. Look at that. We've nice progressively made lower lows, lower highs, and now we're making higher lows, and we've got similar highs as the market rejects these lower prices. Again, this is where the reversal in the auction starts to show up. So what about today? Again, we have the point of control, we have the MC, we have the overnight point of control, we have the full session VWAP, full session mid, open auction. Again, I'm expecting us to test down early on, looking for either a test of this low volume node, yesterday's low volume node, which is at that number, the 56 area. Looking for a push down, potentially into 50, consolidate, pull back to the open, and then I'm looking for the squeeze. And the squeeze, when we go for the squeeze, in that situation, I'm looking for 81, which happens to be the 50% fib. 80 happens to be the 50% fib from the top. 81, 82, expecting a setup short up there. Setup short on an initial test up here if we get there. That's a fair amount of range for expiration, but I've been very conservative with these ranges and it has not paid off. So the secondary, of course, is an open that tests up, pushes down, consolidates between 50 and 56, tries to dip down, comes back in, and then gives it up and moves into the point of control for the lower distribution. So bringing us back down into the 45, 44 area. That was again last week's low, and then we finish right here at last week's settle in the 50 area. That's scenario 2. These are the two key scenarios. We're opening in range today for quad witching Friday, and who knows? Just kind of expect weird sweeps and weird fills and things like that. That's just the nature of the beast right now. Good luck, and I'll catch you on Monday morning, bright and early, for the beginning of our next rotation, the next quarter, basically, for us and for this contract. Take care.